Hi everyone and welcome to today's morning report on Tuesday the 16th of June with me, Richard Perry, market analyst at Handtech Markets. European trading sessions once again off to a bad start. Both FTSE and DAX is down, CAC as well, and what we've actually seen is big breakdowns in these indices. Both CAC and FTSE have broken to 4-month lows, and it certainly looks like these indices are under increasing pressure. My chart of the day is FTSE. I'll talk about that in a bit. Now, the moves has come amidst a continued sort of deterioration in the negotiations between Greece and its creditors. You've now got Greek Prime Minister Tsipras accusing its creditors of pillaging Greece, which is certainly not a great bit of rhetoric there out from the Greek Prime Minister. Certainly doesn't really improve the prospects of a deal. And what we've seen is continued downside in these markets. But interestingly enough, the forex markets are fairly consolidated today, perhaps ahead of the FOMC tomorrow. But we are seeing moves in the bond markets. And let me just show you first of all the German 10-year bond yield is now falling. It's back below that support at 80. 0.8, and it's now consistently on the downside. Interestingly, that investors seem to be buying back into the German Bund, and no major downside on the US. But let me just show you the contrast of Germany versus Spain. While German bunds are being bought, Spanish yields are spiking higher, which suggests peripheral Eurozone debt is getting sold off considerably now today. So show you Italy. Italy the same. So across the there's a big divergence now, big dichotomy on these Eurozone bond sovereign debt yields, and certainly German bunds are being bought once again. Interesting that the euro has not actually reacted yet to that move on the bund yield, but certainly the FOMC tomorrow may have a big impact, or may have a big bearing on that. So in terms of the data that we've got to look out for today, we've got the UK inflation data at 9:30 UK time. That's forecast to actually just come back into inflationary territory, plus 0.1%. Then at 10 o'clock, we've got the German ZEW economic sentiment, and that is forecast to just dip again, actually, back down to 37.1. So that would be suggesting that the German ZEW has rolled over, and there is a correlation between ZEW and GDP data as well. So that's interestingly enough that German data seems to be rolling off the top a bit. We've also got then to the afternoon the US housing data. We've got building permits and housing starts. Building permits spiked higher last month. Oh, where's that gone? Anyway, that's annoying. Building permits spiked higher last month to let me just see. Oh, highest on record. I say on record, only back to 2008. But anyway, still very strong numbers last month. Slightly back to 1.1 million is the expectation there, but still very positive. Also, home starts as well. And that again was a multi-year high last month at 1.4. And again, it's due to just come back slightly to 1.1 million. So the expectation is that the housing data in the States, or certainly according to the building permits and housing starts, remains positive. You had that positive data on the NAHB yesterday as well. So housing data is still okay in the US. And fairly supportive of that dollar. But that takes me to my chart of the day. FTSE, let's have a look at this, because we have had this big breakdown on FTSE today. That's the hourly chart. Let's look at the daily chart first of all. That's the big breakdown below that March low. That big March low at 6695 has now been broken, and therefore we're now at levels not seen since January. If we were to get a close, now this is important, if we were to get a close below that support, then that would certainly indicate that the outlook has significantly deteriorated. If it closes back above that support, then perhaps it wouldn't be, it's not so bad of an indication, because you'd want to see a closing breakdown on such an important support. and obviously at the moment what we're seeing is all these momentum indicators deteriorating away. Look at that, look at those MACD lines. They are confirming the breakdown January of that low. We're also seeing the RSI pushing down towards 30. That's not happened since December. And also stochastics in bearish configuration as well. Look at these moving averages as well. Below the 144, also below all these shorter moving averages are crossing over and turning down at the same time. Could argue bearish crosses or dead crosses there, but I think you've slightly not yet falling on the 89-hour, that one yet. So just a series of bearish moving averages really. The only caveat that I would say to this at the moment is the fact that if Greece does come out in the next few days and, say for example, comes out with some deal, obviously I mean that's towards the end of the month. Whether it actually happens or not is another matter, but if it does happen, then you probably see these stock markets spiking higher again, or you would see them spiking higher, but at the moment they are under pressure. This is the hourly chart. That's the recent breakdown. You saw the break below the low of 67.34, and we're still under pressure today. That sharp move down. You've got the opening or the high of today at 67.10, so that is the initial resistance. But 67.34 as that old support turns new resistance, so that is your first real resistance that comes in. And then, to be honest, you've been falling fairly consistently on the FTSE in the last few days, so you'd argue that the real resistance doesn't now until that reaction high at 68.10. So that's still sort of 140 ticks away from where we are at the moment. So quite a big move that would be on the FTSE to break above that. But still, at the moment, under pressure, it would need to rally back above that 67.34 mark to really suggest that. There's a rebound potential rebound in progress. But as I said, you're looking out for this first breakdown of this move, and that is a close below the 66.95 level today. Now, in terms of supports, you'd argue you've got these supports back from January and December. Initial one sort of comes in at 66.50. And then a couple of also reaction highs as well, 65.81. But certainly at the moment, the FTSE is under pressure. Interesting, yes, 66.56. Interesting on that. So there is an element of support that has come in. So that is arguably a bit of support intraday. But we'll see how this goes. But certainly on the close down below 66.95 would be a big bearish move on FTSE. Thank you very much for listening, and I'll speak to you later.